Welcome back. Redfin reported just a couple days ago that cancellations of home purchase contracts increased to the highest levels in nearly 1 year. I'm going to provide some analysis regarding how this compares to previous years and also how each of the different areas in the US fare, because some areas cancellation rates are very, very low, whereas other rates or other areas rates are increasing greatly here. I'll also provide, before I share this report here, with you guys, why people cancel contracts. Is this normal, and is it more from home sellers or more from home buyers? So of course I have a lot to share in today's video. Thank you so much for joining me in today's video, and let's begin. First, let me provide some context regarding who is actually canceling contracts here. So the vast majority of contracts being canceled is actually from home buyers. Based on my experience of being an agent for about 10 years now, actually over 10 years now, the vast majority of those contracts being canceled is actually coming from a home buyer. So on rare occasions, sellers do cancel contracts, and they do have that ability if the buyer breaches a contract and also if they have a contingency as well. So for example, when I sold my house, I had a contingency with that buyer saying, hey, I'm not going to sell my house to you unless I'm able to identify and also have the ability to close on a replacement property. If I don't have that ability, or if that deal falls through on this house I want to buy, I am not going to sell my house to you. That is a seller contingency to find a replacement property. So for example, in that scenario, if I didn't find a replacement property and I chose not to buy the replacement property, I could go back to the buyer of my house and say, hey, I have this contingency in place. I wasn't able to find a house, and therefore I want to cancel the purchase agreement with you. This all varies by the area and of course the contract as well, but I just want to provide some context here, because when we're talking about cancellations of purchase contracts, the vast majority is actually coming from home buyers. So having said that, why do home buyers actually cancel contracts? Here's 5 top reasons that I came up with based on my experience here. I've seen virtually every single reason why buyers are canceling, but here are the 5 main reasons here. Number 1, the home buyer got their offer accepted. They went through all their inspections and they found major issues with the home. So for example, maybe they found foundation issues, maybe they found big issues or huge issues with the roof that needs replacement, and therefore they canceled the contract because of all these issues that were uncovered during the inspection process. Number 2, the seller and buyer do not reach an agreement for a request for repairs. So in general, when a home buyer gets their offer accepted, they get their inspections done, and then they submit a request for repairs to the home seller. 9 times out of 10, usually the seller agrees to that, unless you have an as-is contract here, in which the home buyer is buying the house, agreeing to all the conditions and all the issues that the house has. But 9 times out of 10, the seller agrees to at least some of the buyer's request for repairs. However, though, if they cannot come into an agreement here, a mutual agreement regarding that request for repairs, then sometimes home buyers also back out as well. So that's number 2. Number 3, buyers in general just could get cold feet. They could decide that this neighborhood is not right for them, this house is not right for them, they're scared about the housing market or the economy. And therefore, during their inspection period, they can back out and in general get their deposit back. Also, there's number 4 here, buyer's loan gets denied. The buyer's loan gets denied by their lender. This could be due to a variety of reasons, due to rates increasing and therefore increasing their average monthly housing payment to a level that disqualifies them from buying the house. So that's number 4. Number 5, the appraisal comes in for less than the contract price. So say you're a buyer, you got your offer accepted for $500,000. You get your inspections done, and also your lender orders an appraisal of the property if you are using a loan to buy a house. If the appraisal comes in at, let's just say, $450,000, but you're in contract for $500,000, then your lender is not going to allow you to buy that house unless you put an additional money down for your house. And also 9 times out of 10 as well, most home buyers are not willing to buy a house that's valued at $450,000 when they're in contract for $500,000. Therefore, if a home buyer has an appraisal contingency in hand, they generally can back out and get their deposit back as well. So I hope this all makes sense to you guys. I want to provide this context for you guys because there's a lot of different reasons why home buyers back out, not due to just the fact that the housing market is going down or rates are increasing. There's a lot of reasons why buyers decide to cancel the contract regardless of rates. So let's actually look at the actual report here from Redfin, just announced on September 15th. It says home purchases fell through at the highest rates in nearly a year this August. It says nationwide, nearly 60,000 home purchase agreements were canceled in August, equal to 15.7% of all houses that went under contract for the month of August. That's up from 14.3% from a year ago and marks the highest percentage since October of 2022, when mortgage rates surpassed 7% for the first time in 2 decades. It's actually pretty wild to read that because we've had rates over 7% ever since late July. So we have more or less rates over 7% for about 2 months now, whereas back in October last year, that was the first time that rates surpassed 7% in 2 decades. And keep in mind, that was when rates more than doubled because to start the year in 2022, rates average at 3.3%. So of course, it makes sense that a lot of home buyers canceled contracts to buy houses, and of course, why home buying demand fell greatly last year as well. It also says here the average interest rate on a 30-year fixed rate loan for people with great credit is 7.07% this August. That was the average rate for the entire month of August. At one point last month, though, it hit 7.23% according to Freddie Mac's weekly survey. At that time, that was the highest since 2001, sending the typical homebuyer's monthly payment up significantly from last year. So speaking of that, average rates, according to the Mortgage News Daily, as of Friday, was 7.29% for a 30-year fix. 15-year is at 6.64%. I remember when that was around 2.8, 2.7%. Crazy. Anyways, jumbo is at 7.34%, and FHA and VA is around 6.75%. Now, of course, daily rates today aren't affecting cancellations back in August. So I'll provide this additional information for you guys as well. So let's say you are a home buyer, you got your offer accepted on the week of July 20th this year, and your average rate was 6.78%. By the way, that was the weekly average rate according to Freddie Mac back then. So at 6.78%, let's say you weren't able to lock in your rate for whatever reason until rates increased to 7.09% for the week of August 17th. Now, this is just an example. I'm not saying this is what is happening overall, but here's just an example for you guys. So let's say that person is buying a $500,000 home, putting 5% down. Your loan amount would be $475,000. And your rate was 6.78% when you got your offer accepted. So your housing payment of principal and interest, or P&I, was $3,090 per month. Now, let's say, again, you weren't able to lock in your rate right away, and by the time you were able to lock in your rate, you were looking at a rate at 7.09%. At $500,000 home purchase, putting 5% down again, your housing payment would be $3,189 per month. So that's an increase of about $100 more per month in your housing payment to buy that same house because rates increase from 6.8% to approximately 7.1%. In my personal opinion, this $100 increase is significant, but I would imagine that a lot of people who were canceling contracts back in August, if they saw rates increasing to 7.1 or nearly 7.3%, I would imagine that more often than not, those home buyers were more scared regarding the direction of our housing market, given that average rates increased to about a 20-year high. So I would imagine that a lot of these people who were buying houses, they got their offer accepted when rates were much less than that. They saw rates increasing to nearly 20-year highs. I would imagine a lot of those people would decide to cancel their contracts in worry that their home value was going to decrease very, very soon. I'm not saying that home prices are going to fall greatly, but I would imagine a lot of people will be worried regarding buying a house and seeing their home value decrease in the months ahead. Keyword potentially, of course, though, right? All right, let's get back to Redfin's report because the national cancellation rate was just under 16%. Back in October last year, the rate was around 16.2%. Also, this is kind of interesting as well because a lot of people who were in contract to buy houses right at the onset of COVID canceled their contract as well. The percentage there was about 16.5 to around 17%. What I'm more focused on is the rate back in pre-COVID levels though. So in 2017 through 2019, the cancellation rate was in the range of 12 to 14%. Now it's at more or less 16%. All right, before I share how each of the metros fared, they actually looked at the cancellation rates for the month of August for the 50 most populous areas here. Before that, I want to share this quote from a Redfin agent based in Reno, Nevada here. She, I think, says, "I've seen more home buyers cancel deals in the last 6 months than I've seen at any point in my 24 years of working in real estate. They're getting cold feet." In other words, home buyers are getting cold feet regarding the direction of our economy, of course, our housing market as well. Buyers get sticker shock when they see a higher rate on paper alongside extra expenses for maintenance, repairs, and closing costs. Many of them would rather back out, even if that means losing your deposit. And also, of course, a lot of home sellers are not willing to give in to home buyers' requests for repairs, and then the home buyer cancels the contract as well. So let's have a look at how each of the 50 most populous metros, how they compare in their cancellation rate this August, this July, and also compared to 1 year ago, back in August of 2022. It says here, please note houses that fell out of contract during any given month here didn't necessarily go under contract during the same month. As I shared in that example here, home buyers could have gotten their offer accepted back in late July, for example, and they decide to cancel their contract in August. So having said that, here are some of the highest rates in the US right now. And keep in mind, the average rate nationwide is at 15.7%. Atlanta, Georgia is at 23.7%. That's pretty remarkable, right? So one every 4 contracts signed were canceled for the month of August. Roughly on par with last year's levels at nearly 25% as well. Also in Fort Lauderdale, Florida, the share there was 23%, or I should say the rate was 23.1%. 1 year ago, it was 21.6%. So at 23%, this means that more or less one every 4 houses under contract fell out of contract for the month of August. Also, some fairly high rates as well was in Fort Worth and also Houston, Texas as well, over 20%. Jacksonville, Florida saw a big increase compared to a year ago at 26.6% right now. That was more or less the highest percentage nationwide. Some other cities that also had a fairly high percentage as well was Las Vegas, Nevada at 24%. Back in August of 2022, the rate was only 21.5%. Also, we had Nassau County, I can't pronounce that, in New York, had a very low percentage, only 6.7% compared to the national average at nearly 16%. It also was low 1 year ago as well at 6% as well. Newark, New Jersey also had a very big increase. So 1 year ago, the share was 2.3%. Now it's at 11.8%, a big increase compared to 1 year ago, even though the current rate right now is still below the national average. Orlando, Florida is at 23.1%. Riverside, California also saw a fairly significant increase from 17.5%. Now it's at 21.1%. San Antonio, Texas is at 23%. It also was above 20% from a year ago. But San Francisco and San Jose at very low levels. San Francisco at 6.4%. 1 year ago is at 4.2%. San Jose, look at that. 1 year ago, they had an 8.3% share. Now it's at 6.6%. Tampa, Florida, also above 20% as well. And again, the national average at 15.7, 1 year ago, 14.3. And with that said, please comment below with your biggest takeaways from today's video. Also, check out that link below if you guys want a real estate agent referral, or go to realestateteamfinder.com. Hope you guys have an awesome day, and I look forward to seeing you on the next video.